Hello viewers, welcome to my channel. I am Hasham Ali Khan. Previous two videos, I have explained you in detail regarding the income from capital gain. I have explained you what is the meaning of the term capital gain, what is capital asset, what is transfer of asset, and the rules regarding how to compute the capital gain. The continuation of that topic in this video also. In this video, two more topics I am going to explain you which are very important, not only from theoretical point of view but also from problems point of view. First of all, cost of acquisition and indexed cost of acquisition. These two topics I am going to explain you in detail. Without understanding this, you cannot go to the problem. Every problem will be peculiar, will be difficult for you. So before solving the problem, be acquainted about the cost of acquisition and indexed cost of acquisition. So take the screenshot of the points which I have written on the board regarding the cost of acquisition and indexed cost of acquisition. Then I'll explain in detail. Come on, first of all, cost of acquisition. Last video I have explained you, in order to compute the income from capital gain, we have to deduct the cost of acquisition from consideration received. Consideration received is the selling price. The selling price minus cost of acquisition, we will get the capital gain. So you must be clear regarding how to compute the cost of acquisition. So cost of acquisition means the total of all expenses incurred to acquire the asset, to acquire or purchase the asset. That is purchase price and expenses incurred after purchase till its first use. That is installation charges, etc. That means any incidental expenses incurred to purchase the asset, that will be added to the cost of the asset. Example, brokerage paid, installation charges paid. All these are the incidental expense incurred to acquire the asset, to purchase the asset. So simply, cost of acquisition means the purchase price of the asset and all incidental expenses incurred to purchase the asset. Now, if the cost of the asset cannot be ascertained for some valid reasons, the fair market value, it is called FMV, is taken as the cost of acquisition. Sometimes it is difficult to ascertain the cost of acquisition. The assessor does not know what is the actual cost when he has purchased it. He forgot it. There is no proof at all. So in that case, if some for a valid reason there is no cost of acquisition, then Income Tax Act says take the FMV, fair market value, as the cost of acquisition. Similarly, if the asset is purchased before 1/4/2001, remember these points because these points we are coming across while doing the problems. So if an asset is purchased before 1/4/2001, then the cost of acquisition is higher of the following two amounts: actual cost or fair market value on 1/4/2001. So Income Tax Act has given one benefit to the assessee, that if an asset is purchased before 1/4/2001, the assessee can choose higher of the following two, that is actual cost or fair market value. Example, an assessee has purchased a building for rupees 10,000 in 1968. In 1968 he has purchased for 10,000 before 1/4/2001. And the same value of building on 1/4/2001 was, let it be 2 lakh. The fair market value is 2 lakh, whereas actual cost is 10,000. So Income Tax Act says the assessee can choose higher of the following two: actual cost 10,000 or FMV 2 lakh. So whichever is higher. So if the assessee choose 2 lakh rupees, his tax liability will get reduced. Otherwise, if income tax would not have given this provision, then his tax liability will be more because cost of acquisition was only 10,000. So simply You have to see in the problem, if the asset is purchased before 1/4/2001, the assessee can choose higher of the following two: actual cost or FMV on 1/4/2001, whichever is higher. This benefit is not allowed for depreciable assets. If an assessee has transferred depreciable asset, which are the depreciable asset? Land and building, plant and machinery. Land and building, plant and machinery, these are depreciable assets. If depreciable asset is transferred, this provision of fair market value will not apply. We have to take the actual cost, not FMV. Then stamp duty. One more concept you have to remember about stamp duty. So what is the stamp duty? It means the value adopted or assessed by any authority of the central government or state government for the purpose of stamp duty in respect of specified assets. So when the asset is being registered, the stamp duty will be calculated by the authority of central government or state government. Example, a building purchased. So at the time of registration of the building, stamp duty of that property will be calculated according to the authority specified by the central government. So the value fixed by the authority appointed by the government is called stamp duty value. So in case of land and building or both, if stamp duty value SDV is available, then FMV or of such land or building or both on 1/4/2001 shall not exceed the stamp duty value. Suppose the value of the stamp duty value is, let it be 8 lakh, but the fair market value is 10 lakh. So we should not take fair market value 10 lakh. Income Tax Act says the fair value should not exceed the stamp duty value. What is the stamp duty value? Example, 8 lakh rupees is the stamp duty value. 10 lakh rupees is the FMV. So don't take 10 lakh, only 8 lakh you take. Only 8 lakh you take. Suppose if the stamp duty value is 10 lakh, but the fair market value is 8 lakh. Now you can take 8 lakh only. Don't take stamp duty. That means the actual FMV should not exceed the stamp duty value. This point you have to remember while doing the problem. We'll come across this point. Next is indexed cost of acquisition. This is very, very important. Frequently it will be asked in theory question, and also every problem we have to find out indexed cost of acquisition. So what is this indexed cost? Indexed cost of acquisition means showing inflated or increased cost price instead of actual price. In order to compute the income from capital gain, we have to deduct the cost of acquisition. Cost of acquisition. So if actual cost of acquisition is taken, the tax liability will be more, because now you see there is inflation. There is a general tendency of increasing in the prices of goods and services. When the value of money is decreasing, the price of goods and services are increasing. For example, a person has purchased a property 20 years back for rupees 1 lakh. For rupees 1 lakh, he has purchased a property 20 years back. Now current year he is selling the property for rupees 20 lakh. So purchase the property for 1 lakh, selling the property for 20 lakh. That means 19 lakh rupees is the capital gain. A huge tax he has to pay unnecessarily, because we cannot compare 1 lakh rupees with 20 lakh rupees. 20 lakh rupees you are getting now, but 1 lakh rupees you have paid 10 or 20 years back. Is the value of money 20 years back and current year is same? No, the value of money has decreased. Inflation. So Income Tax Act has given a benefit to the assessee that you can calculate indexed cost of acquisition, means increased cost of acquisition, inflated cost of acquisition. What will be the effect of this indexed cost of acquisition? The tax liability will get decreased. Same example I'll take. 20 years back, the cost of the asset was 1 lakh. Current year it is sold for 20 lakh. So 20 lakh minus 1 lakh, 19 lakh rupees is the capital gain without indexing. Without indexing, 19 lakh capital gain. Suppose if indexed cost of acquisition is given, Then the indexed cost of acquisition is 10 lakh. So selling price 20 lakh, indexed cost of acquisition 10 lakh. So 20 lakh minus 10 lakh is 10 lakh rupees capital gain. So without indexing, the SSC is getting 19 lakh rupees capital gain. With the indexing, the SSC is getting a capital gain of only 10 lakh. So his tax liability will get reduced. So simply, indexed cost of acquisition means inflated or increased the cost price of the asset. The cost price is increasing. The effect is his tax liability will come down. The capital gain amount will come down. So the price is justified on account of inflation. Why this indexed cost of acquisition benefit is given? Income Tax Act says there is a prevalent inflation. So due to inflation, महंगाई जिसको कहते हैं, तो due to inflation, the value of money is decreasing, the prices are increasing. So unnecessarily a burden will be there on the head of SSC. So government has given this benefit of indexed cost. The net result of indexed cost of acquisition is a reduction in tax liability. By using this indexed cost of acquisition, the tax liability will get decreased. The increase in cost of acquisition is known as indexed cost of acquisition. That is the meaning. So if a theory question is asked in examination, you can write all the points which I have given, which I have explained. Now, this benefit is also permitted for cost of improvement. See here, cost of acquisition and cost of improvement. On both will apply indexed cost of acquisition and indexed cost of improvement. Right? Now, the benefit of indexation is allowed only for long-term capital asset. One point you have to remember very carefully, seriously. This indexed cost of acquisition is applied only for LTCG. For calculating long-term capital gain, we apply indexed cost. Indexation is not allowed for short-term capital gain, never. If you see in the problem, if it is short-term capital gain, never use indexed cost of acquisition. The cost of acquisition and cost of improvement asset will be linked with cost inflation index, which will be notified by the government. So this inflation index will be notified by the central government time to time. Every year the index number will change. So by using the index numbers given by the government, we will calculate indexed cost of acquisition. Now, the above rule does not apply. This indexation rule will not apply in few cases. What are the few cases? Shares or debentures acquired by non-resident Indian companies in foreign currencies. If non-resident Indian companies are there in foreign currencies, the shares or debentures acquired will not apply indexed cost. Second, depreciable assets. Just now I told you land and building, plant and machinery are depreciable assets. On these assets, indexation is not allowed. Third, in case of debentures and bonds, indexed cost of acquisition is not to be calculated. Debentures and bonds, remember, indexation not allowed. Lastly, short-term capital assets. When we are having short-term capital assets, remember in the last video I have explained you in detail regarding short-term capital assets and long-term capital assets for financial assets and non-financial assets. Already I explained you in the previous video. Now, long-term capital gain. How to calculate long-term capital gain? Briefly in one paragraph I have given. Consideration received or selling price. First of all, we take the consideration received or sale price. From consideration received, deduct the transfer expenses. Transfer expenses we deduct. Suppose I sold a property for 50 lakh. For selling this property, I paid 5 lakh rupees as transfer expenses, brokerage, commission to middlemen. So from 50 lakh rupees consideration received, 5 lakh rupees I have paid for transfer. Deduct 50 minus 5, 45 lakh rupees the net consideration. It is called net consideration. From net consideration, I will deduct two items. Indexed cost of acquisition and indexed cost of improvement, if any. Indexed cost of improvement, sometimes it will be there, sometimes it will not be there. So if indexed cost of improvement is not there, then simply we deduct indexed cost of acquisition. If both are there, add up both and then deduct. We'll get the income from capital gain. So the cost inflation index as notified by the central government is as under. Now, the index numbers which are specified, notified by the central government are from 2001-2002. No index numbers are available presently for income tax purpose before 2001-2002. That means the index numbers are specified, applied from the year 2001-2002. So here 2001-2002 cost inflation index is 100. Then 2002-2003 105, 2003-2004 109, then 4-5 113, 5-6 117. Like that it will go up to current previous year. Our assessment year is 2019-21-22. Current assessment year is 21-22. The previous year is 2021. So last month 2021 is the previous year. So for 2021 previous year, the index number is 301. So don't remember need not remember all the index numbers. It will be given in the problem. Only two index numbers you have to remember. The first is the beginning, 2001-2002. 2001-2002 index number is 100. This you have to remember. And current previous year is 2021. For current previous year 2021, index number is 301. These two numbers you remember. Remaining numbers will be given in the problem. Now, the index numbers are made applicable only after 1/4/2001. 1st April 2001 and after the index numbers are available. No index numbers are available before 1/4/2001. So, if an asset is purchased before 1/4/2001, the index number should be taken as 100. Whether it is purchased on 1/4/2001 or before that, we'll take 100. After 1/4/2001, all the index numbers are given. That's it. So, if an asset is acquired before 1/4/2001, index number for the purchase year shall be taken as 100. This point you have to remember. Now, cost inflation index is applicable on all assets, whether movable or immovable. Any type of asset, the cost inflation index is applied. Now, how to calculate the indexed cost of acquisition? Remember the formula. The formula for calculating indexed cost of acquisition is actual cost or original cost or FMV. If the asset is purchased before 1/4/2001, we take the FMV. If it is purchased after 1/4/2001, we'll take the original cost. So whatever is the original cost or FMV, this will be multiplied by index number of the current previous year or selling year, transfer year of sale. Index number of the year of sale divided by index number of the year of purchase. Example, the current previous year is 2021. The asset is sold during 2021. So what is the index number for 2021? 301. So we multiply, numerator will take 301. Denominator year of purchase. Suppose the asset was purchased during 2010-2011. So what is 2010-2011 index number? 167. So denominator will take 167. So numerator 301, denominator 167. Right? This will be multiplied by original cost. We'll get the indexed cost of acquisition. The concept will be more clear while doing the problem on this computation of income from capital gain. So in this video, I have explained you about the cost of acquisition and indexed cost of acquisition. This concept will be asked in theory, and also this lecture is very, very important for problems also, because every problem we will have to calculate indexed cost of acquisition and indexed cost of improvement. Inshallah, we'll continue the next topic in this capital gain in the next video.